Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for making time today.
Good afternoon, Devin.
Well, this week we had China reporting on-year economic growth for the third quarter below 5%, which is extraordinarily low by China's standards and lower than market expectations. They say, though, they're still on track for 6% growth this year. Still, there are other risks like the energy shortage and the debt crisis at Evergrande. What do you see happening in the Chinese economy?
Well, I think Beijing has decided to pursue a long-term policy goal of decreasing debts of households and corporations rather than short-term economic recovery. It means that China faces a prolonged period of slower growth with increasing policy uncertainties as Beijing attempts to carry out ambitious long-term reforms that have left investors jittery. China's economy recorded a steeper than expected, as you said, Devin, economic slowdown in third quarter, expanding 4.9% from a year earlier. The growth rate reflected a host of headwinds, like tighter rules on the property market that have chilled activity in the sector, widespread power shortages, and continued concerns about COVID-19. After China emerged from COVID shock of 2020 as the only major world economy to report positive economic growth, it set the target in March for an expansion of more than 6% economic growth. At the same time, Beijing made clear that it wanted to use the extra breathing room to take on a long festering issue of in Chinese economy, including controlling the debt problem in China.
Well, staying with China for a minute, the difficulties in the global supply chain are resulting in higher prices around the world, and China is Korea's biggest trade partner, so that presents all kinds of concerns if its economy is slowing down. What effects do you see for Korea if China runs into more trouble?
We know that Korean economy is highly intertwined with Chinese economy these days. And the degree of connection between the two economies is even getting higher over coronavirus pandemic. And what Chinese policymakers might not have counted on was the extent to which other factors, including the outbreak of variant of coronavirus, global supply chain bottlenecks, and skyrocketing coal prices would add to the economic strain. Since Beijing can't let Chinese economy grow slower over more than 2 quarters, Beijing will be forced to ease fiscal and monetary policy earlier or more forcefully than it has intended to ensure that this year's second half slowdown doesn't spiral out of control and spill over into the next year. So market is still relatively optimistic that China's economy will grow by about 8% on year for this year. But as you said, Devin, we should be watching carefully how Chinese economy develops, because there are lots of uncertainty factors in Chinese economy.
Right, and investors all over the world are watching that. If we can look at the equity market, stocks on Wall Street closed higher again on Tuesday as corporate earnings continued to come out. The S&P was up for a 5th session in a row and is right near an all-time high. What's the story in the global markets?
U.S. market notched its highest close in 6 weeks as investors became happy with the earnings report to see how companies are managing inflation and supply chain woes. Third quarter earnings season is in its early days, with about 10% of the major companies having reported. Of those, roughly 4 out of 5 have beaten profit forecast. Also, 10 of the 11 sectors in U.S. stock market advanced. This is led by healthcare and utilities groups, while consumer discretionary stocks pulled back. The Dow Jones Industrial Average added 0.6% to its highest close in 2 months. The tech-heavy Nasdaq Composite rose by 0.7%. But I have to say that the inflation is expected to be stickier than originally expected by central bank. So there will be more and higher ups and downs in U.S. markets until these factors disappears. Along with U.S. markets rise, Asian markets gained over 0.1% Wednesday, except Shanghai's market shrank over 0.2%.
Right, and today Korean stocks started higher coming off those Wall Street gains, but in the end closed lower. Shares of Samsung Electronics, for one, weighing on the main index, with institutional investors net sellers. Tell us about the domestic market.
As you said, in early morning session, domestic markets continued to rise from yesterday's gains due to U.S. markets' positive impact on domestic markets. But from the beginning of afternoon session, markets declined quickly as concerns on domestic inflation, higher interest rate, and ongoing bottleneck troubles in global production system intensified. Both of institutional and foreign investors' huge sales led the market to negative returns. Institutional investors net sold about 210 billion won in Kospi, and foreign investors also net sold 110 billion won in Kosdaq today. Kospi retreated by 0.5%, and Kosdaq also lost by 0.4%. Even with declining market, most of the large cap stocks advanced today, but Samsung Electronics retreated by 0.4% today. In industry-wide comparisons, media stocks increased more than 5% on average in the single day today.
And finally, if we could talk about currencies for a minute, Professor. Data show last month Korea's foreign currency holdings went up by about $1.6 billion. Households, though, were holding less in dollars than before, while companies had much bigger dollar deposits than ever before. What's happening there? Why might companies be holding on to all this foreign currency?
Foreign currency deposit at banks in September from a month earlier increased as exporting companies increased dollar holdings, according to Bank of Korea. Residents' outstanding foreign currency denominated deposit came to 94.2 billion US dollars at the end of September, up 1.6 billion US dollars from the previous month. For clarification, residents here include local citizens, foreigners staying here for more than 6 months, and foreign companies. It represents the second consecutive month of on-month increase. In August, they climbed by 470 million US dollars from the previous month. Bank of Korea says exporting companies put more dollars into local banks on the back of improving overseas shipments. Last month, the country's export rose by 16.7% on year to a new monthly high to extend their gaining streak of the 11th straight month.
All right, Professor, we always appreciate your analysis for us. Thank you for sharing those insights with us. We appreciate it.
Thank you very much.